Hello and welcome to Weekend Investing Daily Bytes. We are shooting episode 304. And what a grand crypto fall that has happened in the last 48 hours. A major fall of the second largest exchange, FTX, and a cascading impact of that fall. The company is going bankrupt, and another exchange which was about to take it over did some due diligence, and then they walked out of the deal. So there is a major liquidity crunch in that particular space, which can have some sort of a cascading impact on other markets also. So we'll take a look at some of the developments within this market and try to draw some lessons from it as we normally do. This video is not to make fun of anybody who may have lost money in cryptos or maybe saddled with humongous losses. That is never the intent. The intent is to at least learn from our own or somebody else's mistakes so that we don't have to go through that much pain. The markets all red today, opened reasonably soft, but through the day tried to maintain that level but gave up towards the second half of the session. And then in the last half hour it was some recovery, but nevertheless Nifty dropped about 0.7%. Autos were dramatically down at -2%, led by Tata Motors. Losses much more than what was expected in the quarter. And along with Tata Motors, Maruti also was dragged down. PSU banks that have been running very hard, which have gone up 35% in the last 3 months and 8.3% in the last week, also had some profit booking at -1.3%. Commodity stocks, energy stocks, consumption stocks, a lot of pharma stocks, metal stocks, many of these spaces taking some profits. I wouldn't say there was directed short selling of any nature, but I think it's just some profit taking that has happened. Nothing really to panic about. The overall global markets stay a bit soft, and India, as we have seen, has been outperforming, and we are still just around 18,000, so not too far from all-time highs. So when anything is near all-time highs, my belief is that the probability of it going towards all-time high is very, very high. So one should not consider a asset which is at all-time high or near all-time high to be weak until it starts to go the other way. The broader markets were weaker, so small caps were down 1.23%, mid and small cap index down 1%, Nifty Next 50 1%, CNX 200 and CNX 500 also down 0.8%. In terms of weekend investing strategies, several strategies took a hit. MI80H, ATH2 both down more than 1.5%, MI35 down 1.5%, MI20, MI India Top 10, MI All Cap all down between 1 and 1.5%, and only MI Evergreen, which has some gold hedge, retained some semblance at -4.46%, and others were also somewhere nearby. So not a very pretty day for the weekend investing strategies as well. As you can see on the heat map for the day, Reliance leading the market down -1.2% along with State Bank at -1.6%, Bajaj -3%, Axis Bank based on some bulk deals down 3.5%, Titan down 3%, Tata Motors, as I mentioned, down 5%, Maruti and Mahindra also down 1.5% and 3%. And then you saw some profit taking in steel, consumption stocks, Asian Paints all coming off, ITC coming off, Nestle, Britannia, Cipla, NTPC, L&T. So there was no place to hide as such, and most of the Nifty components were in the red. Power Grid down 1.76%. Some sporadic gains within the top 500 stocks. So Gujarat Pipavav up 7%. Nykaa was up 6%. Nykaa has done a extremely clever maneuver. They have issued a 5:1 bonus with the record day being today, and today was also the day that the lock-in was to be opened for the locked-in shares of the IPO. So now whoever had the locked-in shares will not be able to sell until they receive the bonus shares. They only have 1/6 of their holding with them, and that selling may start from tomorrow. So very clever maneuver of dates by the management or by the interested parties at Nykaa to avoid a huge sellout of these lock-in shares, but nevertheless it has helped them, and the stock is up 6.5% from the adjusted last price of 188. Godrej Properties down gained 5.5%. New India Assurance up 4.5%, and CRISIL up 4.5%. Team Lease dramatically down 12.4%. I haven't tracked it, but possibly it's a quarterly result outcome. Aurobindo Pharma, on the news of one of its directors getting arrested, minus 12%. The company has, however, said that it is not related to the company operations. Quest Corporation down 10. Deepak Nitrite, huge cut there, minus 9.5%, and Ramco Cement minus 8.25%. So great grand crypto fall has happened again. If you have been tracking this market in 2017 December, cryptos had crashed, and for the next 2.5 years they kept going down from about 20,000 on the Bitcoin till about 3,000. And then from 3,000 it went to about 65,000 odd, so 20x type of gains, and from 65,000 we are now down again to 16,000. So while if you had bought 5 years back, you are still in great profits. If you had bought a couple of years back near 3, 4, 5,000, even 10,000, you are still in profits. But very few people are able to buy at lows, and those who come in, because a lot of influencers were pushing this stock. MicroStrategy, Michael Saylor was pushing this stock, and a lot of other Twitter experts, so-called crypto gurus, have been pushing this stock, and they have been telling people to sell their house and buy cryptos. So a lot of people are trapped in this globally, and fortunately the Indian government, despite all the pressure that they had to legitimize cryptocurrency trading and etc., they stuck to their guns, and they did not promote crypto trading. You remember I think it was about a year back, while Bitcoin was around 60,000, that you were seeing full page ads coming from influencers, very renowned celebrities on the national dailies, egging people to buy cryptos, to get on to some of the exchanges which promoters of whom later on ran away to Dubai. So it has been a great decision, in my sense, that the government has held their, you can say, conservative stand or intelligent stand to not have allowed unregulated transactions of such large nature to be part of the ecosystem. And I think this step and the additional taxes that were put on cryptos early this year, I think this disabled a lot of people from going into cryptos, at least fresh money going into cryptos, and a lot of money actually got withdrawn at very good levels. So a lot of people should be thanking the government, should be thanking the finance minister for having saved their skin, and a lot of people would have jumped into this, or would have been jumping into it right now, had this been more conducive or more easy for our markets to trade. So just look at the fall in the market cap. So about 3 trillion is where the crypto market cap globally had reached, and this was nearly 200 billion only just at COVID times. So from 200 odd billion to have reached 3 trillion, so 15 times is the sort of gain this market had seen. And you know, while gains are fine, but effectively no utility of it, at least in a real use case, and pure speculation and pure just trading instrument, good for trading for sure, but no utility as such. And a lot of businesses which were running on crypto mining, a lot of mining farms setting up, where they are setting up large banks of computers in Iceland, where or other places where power is cheaper, and just mining so that they can generate Bitcoin and then sell in the market. Now, where the Bitcoin price has come back to $15,000-$16,000, that is said to be the cost of mining now. So the mining rigs will now start to shut down if the prices go below this, and the hash rates etc. will start to fall. So it's like a domino impact that happens once the prices start to fall. It is only good till the prices are going up. Once the prices start to fall, I mean, it just collapses on itself. So the only issue, yes, the 72% fall in market cap, and most people, would have bought somewhere here once the previous high would have been taken out, and a lot of people have been stuck. I did myself a poll on my timeline as to how many people are in the red, and about 75% people are stuck with losses on this. So one must try to draw lessons from it. We must have some strategy going into any asset class. What to do, when to do, how much to do, and how to exit must always be clear. Even if you bought here, you bought here, you bought here, you bought here, you must be clear what are you planning to do. If you are planning to hold for 5-10 years, that is fine. I mean, then that's a different story, where you are saying that, okay, if this money goes to zero, I'm okay with it, and if this money goes to 100x, I'll be glad to get that. So with that kind of a outlook, then you should not be worried, that if it's gone 72% down, don't be worried then, because your initial plan is not to get worried in the interim, and you only want to see the outcome at the end. But it is very difficult psychologically to do that. It's easy said than done. And the only sort of risk now is that with this kind of a $2 trillion loss that is happening, a lot of margin calls have got triggered. A lot of people who were leveraged in this business would now be paying for those margin calls by selling off some other asset classes, and that can start some sort of a contagion, if you will. So that we have to wait and watch a few more days and weeks if there is anything like this. So the madness actually is crazy, because just I was watching this this token today called Tron, and it just went up from 0.06 to about 2.5, so about a 36% rise in like a half an hour or 1 hour, and then it crashed 90% after that. So I mean, this is pure sort of a trading game. If you can catch it, that's good for you, but calling it a investment and calling it fundamentally token based stories, that is a difficult one to digest. So let's now take a look at some of the popular cryptos. Bitcoin, of course, is the most popular. So but Bitcoin has been there for a long time, and this is the last 5 years of the story. So a lot of people were stuck in 2017-18 high near 20,000, and now they are back at the same price. So 4 years of opportunity is gone for those who bought here, went through all this pain, saw all this amazing profits, and yet did not sell and are back here. So while 10 years later it may still make a lot of money, but this kind of up and down surely is very, very tough for your heart, and not everybody can take this. Of course, it also keeps at least some people awake at night watching this 24/7. So this fall took about 2.5 years to bottom here and then take off. We are about 1 year from this fall, so we don't know how long it will take to do the base formation and then maybe start going up again. But somewhere around 10,000 odd is is something that I feel that, in case you have to invest, or you have to sort of get in, maybe between 10 and 12,000 is something that looks good as a money that you can throw away if it doesn't work at all. Ethereum was another one which really was being pumped very, very hard by several, again, Twitter influencers, and it took off dramatically from 200 to 4,800, 24x in a period of less than 18 months. So, you can imagine what something going up 24x in less than 18 months, and if there is no sort of end use case that comes around materially, then it'll fall as bad or as fast also. So we've seen 95% fall earlier, 175% fall, and now 62% fall and 82% fall. So it is par for the course in terms of prior falls, but the only thing is that you have to stay with a strong heart to bear all this. Cardano is another one which was being sold very, very hard. From 3 it is now down to 0.3. So now 90% fall is there. Don't know in the future it will go up or down or go to zero. I don't know how to trade this. Solana is a new casualty. It went up from 1 or $2 to 260. So about 130x type of gain happened on this in the matter of less than 1 year. And now it is down 95%, and people have been averaging and doing all kinds of things here. So another sort of story to learn from. Dogecoin, we all know, has been just falling and 88% down. And Dogecoin is officially a useless coin as per its own creator. So nothing really to analyze there as such. So I feel bad, for young folks who have lost some money on this. But if we see the positive side, then there's no need to get depressed, because one thing is for sure, that you've got very early lessons in your life. If you've lost, let's say you've lost significant capital and you are 25 years old, you've lost nothing really. You've got fantastic lessons. You'll probably do better the next time, and you're doing much better than folks who will accumulate wealth till their 40s and 50s and then go bust with one of these sort of Ponzi schemes. So it is better to take early lessons, and if you are young and you've lost some money, I think if you see the larger picture, nothing is lost. It's best to learn from mistakes and make robust risk management systems for the future. Do asset allocation, do allocation in a way where if this money goes to zero, you are okay. So you can calibrate your portfolio accordingly. Also, a lot of times when something goes 80-90% down, a lot of people quote that Amazon also came back, Apple also came back, Ethereum has done several times of 80% fluctuations. But it is not like a sine wave that it has to go up and down and has to come back. It may come back, it may not come back. So to have that kind of surety that it's down 80-90, I'm down 80-90%, but let's sell my house and put the entire proceeds into this because I know it will go back up, that is stupidness and foolishness. So please don't do that. Every situation, every event will be unique, and it may or may not rhyme with what has happened in the past. So whether your crypto comes back or not is anybody's guess. Actually, nobody can really call it. This is our standard disclaimer. You can read it in the by pausing the video. And thank you so much for your time. I am hoping that you are sharing these videos with your various groups or friends groups or family groups that you have. And do let us know if you don't like something that we do here, or you do like something that what we do here. That feedback is always important. That keeps us going. That motivates us to do these videos every day. And thank you so much for your time. Bye.